Welcome back to the Halftime Report. Let's answer some of your questions now. First up, Joe, got one for you from Marriott, about Marriott, from Mark in Atlanta, Georgia. Is it time to get back in to MAR?
Yes, it is, and that's something that I've done in the last 10 days. Listen, the guidance was a little bit weak. The revenue growth and the unit growth look a little bit weak, but I think Arnie Sorensen has done a phenomenal job diversifying the brand, introducing new hotels, AC, Aloft, if you've ever stayed at them. These are millennial-type hotels. They're shiny. They're brand new. They're places that people want to go to. Marriott for the long term is a great play.
All right. The Linkster from Paul in Downingtown, Pennsylvania. Thanks for the recommendation on BX. Is now the time to buy Carlyle. So Blackstone, good. What about Carlyle?
Well, I think Blackstone still has some room to go, though, because it hasn't been included in the index funds, and it should be at the end of this month. So I still think there's upside to Blackstone. But Carlyle, they don't go to C Corp until January 1st of 2020. So you have time. I think you can slowly build a position, but I do prefer Blackstone.
Okay. Next question for Josh Brown from Nelson in Brookhaven, Georgia. For Josh, CGC, that's Canopy Growth for those playing at home.
Thanks, Fredo.
Hey. Seems to have mellowed out. Are you still optimistic about their potential?
That's a great question. I am, and the stock has mellowed out. The whole sector has been under distribution. If you look at all of the publicly traded, quote-unquote, cannabis plays, one looks worse than the next. They're all terrible. So here's what I would tell you. I have a very, very small amount of the stock. I have no intention of adding right now. This is actually the type of story that I would rather add to on the way up. So I'm watching the 200-day moving average, which is about 40. I want to see it regain that level and have that at least flatten out before I get excited about it. So I'm in here very small. I'm not adding. I don't feel like there's any urgency.
Okay. Okay. You're responsible for everything you say on the show, okay?
Yeah.
Not me, just you.
All right.
Okay. Michael Farr, for you, from Evans in Tampa, Florida. Long J&J?
Yes, and I like the stock. You know, in this world of seasickness, I think this is a good Dramamine stock, actually. It's got a AAA balance sheet, 14.4 times earnings, a discount to the S&P, 2.9% dividend. I've owned it forever. Tyler Matheson makes fun of me about it, but you know, when you have a U.S. Treasury 10-year yielding 1.65, and you almost get twice that for Johnson & Johnson, it's gotten beaten up over the talc thing and the opioid crisis, all very real concerns. Balance sheet's holding up. This is a strong company. I want to own it.
Okay. Doc, got one for you from Spence in Florida. Roku. Buy, sell, hold?
I am
puts,
writing calls against
collar,
it
put spread?
heavily. And I think that spread the judge just spoke of, a collar where you own a put, sell a call to pay for it. Fancy, Judge.
Look at that.
I think that's a great
read your
play.
book, John.
You know?
Yeah, I got a great book.
I got
describes
it for free.
exactly.
Tell you something.
I had to pay postage.
You do options action a few times.
Yeah,
you know,
It's a great stock. It's just been on fire. Needham just moved the target up to 150. Trees don't grow to the sky, Judge. I think you lock some in.